Welcome back, you beautiful people, to the Real Collective podcast, where we do hand signals and have fun. It's a beautiful, blustery day here in Ottawa. The snow finally blown. Snow is blown. We're gonna have
Fallen.
a white Christmas. Fallen, yeah. It's definitely gonna be a white Christmas. A lot of snow. It's been a lot of fun. Not that you're here for the weather report, but as always, hit that like button, subscribe to the channel, share this with someone who you think might like this conversation. Kyle, how you doing today, pal?
Fired up, man. Fired up.
You are
Just,
fired up. Yeah,
yeah. Off camera was a hoot there
yeah.
for a
It's
second.
a lot of bombs. I want you to bring that energy to this show.
See what we can do without getting anybody in trouble.
Listen. I promise you, no one will cancel you. There's only 3 people who watch this show, so we'll be all right. Uh, you can you can increase that number by sharing this on social media. If you're watching on YouTube, thank you very much for your eyes. If you're listening on Apple Podcasts or Spotify, thanks for your ears. If you want to download the buyer or seller guides, you can do so below. And if you want to book an appointment with Kyle or I in the calendar links, you can do so below. Also, big shout out and thank you to our sponsor for today's show, Azita Fathi with Prime Insurance. They offer home, auto, and other insurance. But the main two, of course, are home and auto. And Azita does my insurance, and just got an email from her to renew. And she's done insurance for a number of other clients of ours. And one thing that's really hard to find is good service. So I'll talk a little bit more about a story that I've got about Azita's great service. You can also check out her website in the links below. But let's get into it. We are about a week away, less than a week away from the final rate announcement of, Bank of Canada rate announcement, overnight posted rate announcement of 2024. There's some thoughts about what's going to happen. So we'll kick it off there. We'll talk a little bit about some stuff that the realtors are dealing with on our side, as well as a form that I found to be pretty helpful in a deal that I was working on this week, an N13 forms. We'll talk about that if you're dealing with tenants, and then some a penalty story. Kyle has a good one. That was a very very animated penalty story about a 5-year fixed penalty that was over $150,000. So we'll talk a little bit about that as we move through the show. Kyle, take it away. What are you thinking for the rate this year, or this month, December?
You know what's interesting is that I haven't seen too many direct personally direct media push about this. It's it's a little bit more peripheral now. Like they're kind of like it's instead of just like exactly what the Bank of Canada is going to do, it's, hey, Trump winning is this, 25% tariff is this. Like it's a little bit different. They've eased off their predictions a lot more. I found, like, I'm sure they're out there. I haven't seen it come across my feed nearly as much as it usually does. So I'm still thinking they're on the way down. I'd be surprised if they don't. I'd be a little surprised if they leave it. I'm probably in the camp of 25 points is what they're probably going to do. And just to kind of keep everything going, it's still an odd way. It's still an odd thing where we're seeing the fixed rates have actually come up a little bit more again. And even though prime is dropping, so it's yeah, it'd be interesting to get to see all the phone calls and questions I get on the 12th about why rates haven't dropped and whatnot. But we see that every time.
It's from what I understand, it's the lead up, the run up to the rate announcement that typically has a positive effect on the fixed rates, right? So,
well, it's not that it's positive, just that's where the effect is, right?
Right, when people are sort of in that speculation mode. So yeah, from what I understand, the people who are predicting these things are saying that they're saying it's a quarter point reduction. So that'll be nice right before the holidays. I really think all of these rate reductions. I mean, if we do that, that's a full point drop, point and a quarter, I guess, over the course of the year. I think that's really going to put us in a strong position for 2025. I think there's a lot of things pointing in a strong direction for a rebound here in 2025. We have some challenges to overcome in terms of serving clients. Specifically, like I was telling you about this prop TX thing is it's challenging. So just to give you some bit of a, I guess a bit of an explainer point to it. We've had our own system in the background running, but when the changes came through in the States and there was that big lawsuit against the realtor cooperation, a lot of the service providers to be compliant needed to change how they were operating. And the service provider that we had in Ottawa was really mom and pop, personalized to exactly what we wanted. Like if we sold a property and it didn't close, we could call the real estate board and be like, hey, can you remove that data point because it didn't close and we don't want to screw it up for our seller down the road because, if they bought for 655 and it didn't close, maybe we can turn around and sell for 660 and that'll help our seller client, right? But the new regulations say, no, you're not taking that off. That's a data point. A buyer and a seller agreed to that. The argument being, well, the buyer couldn't close. Well, that's not the question. The question is that was the data point. The seller was willing to accept that number. The buyer was willing to pay it. That's what it's worth, right? So, a lot of changes like that. Anyways, the point being, the service providers in the States changed their mandate for cooperation and how realtors cooperate with each other, and so our system, being very mom and pop and personalized, became less and less compliant. And so we had to change over to a system that was more in line with a more compliant system. And especially, we just got an email coming through talking about an amalgamation of the Ottawa Real Estate Board with Kingston and Cornwall and Renfrew and I think one other board. So essentially all of Eastern Ontario, they're talking about amalgamating to make it the third largest real estate board in Ontario, behind Toronto, which is the largest real estate board, I think, in the world. Like not just in the country. Like the second largest real estate board in the world, I think, is in California. And I think Toronto is the largest real estate board in the world. And of course, when you're that big a size, you have economies of scale, right? You have a lot more sort of staying power and economies of scale. So to keep up with that, we had to change over to a new system. And if we're going to talk about amalgamating with these other boards, we needed to have that same infrastructure on the back end. And the service providers were saying, hey, look, if you want us to provide you the service, it has to be compliant with the way that we're operating. So all of that sort of, and a lot of realtors are complaining and saying, who did this? Call for their heads. This is so hard because we have been lucky. We've had really great, powerful MLS tool that did a lot more for us than a lot of these other people are dealing with. In the old Matrix system, you used to be able to go up and pull out how many transactions a particular realtor has done. New system can't do it, right? In the old system, you'd be
oh, really?
Yeah. So I could just lie and tell you I've sold 1,000 houses. There's no way to find out that's not the truth.
So what's the point in that? What's the point in that change?
Not asking the right person. I just know I know what the differences are. Sorry. The reason that we changed this service provider is because what I told you, the service provider doesn't offer that. We had that in the past in the board, right? But not anymore. You can't even look up. A lot of our agents will try and find an open house. Like, hey, I want to do an open house for a listing at one of our other brokerage agents has for sale, and I want to go and host an open house there. And they'll reach out to the agent. So, specifically one guy lives in Carleton Place. He's like, look, I want to do more business in Carleton Place. I want to pick up. We don't have a ton of listings in Carleton Place. If we do, obviously he'll take care of it. But he's like, I want to do more open houses in Carleton Place. I'm like, well, if you don't have a listing, then reach out to let's say, for example, there's an agent who lives in Orleans but has a listing in Carleton Place. Reach out to them and offer them, say, hey, I'll do your open house for you. But you can't search by brokerage anymore. So you can't search, hey, which brokerages have these listings? Can't search by agent, can't search by brokerage. You can't even send sold listings. Check this out. you cannot send an automated sold listing to your clients.
As a rule or as a piece of functionality?
As a functionality. So in the Toronto Real Estate Board, all the time I'm talking to these agents and they're like, oh, hey, you know, I've got House Sigma. I've got the app. I can see how much the house sold for. I can see all this kind of stuff. And then I talk to the agents and like, oh, yeah, you know, I just have it on House Sigma. I'm like, why do you have House Sigma? I realize because it's easier to get the data from House Sigma than it is from the service provider that we now have, which is the same as the one they have in Toronto. It's easier to get that data from an app than it is from our own back-end system. It is absolutely a step backwards. It's certainly something to complain about. Hopefully there's an opportunity to improve it and to get it better. But, you know, all of these minor changes are just things that we have to flex about, right? Like just things we have to get over or figure out a way through. You know, it's there, and there's a lot of them. It's not just one or two things. It's like, you know, probably 10 different ways that we use the system that we can't use it anymore.
What's the client impact?
So right now, this is a huge client impact. We switched over to the new system, I think on whatever, the 18th of November. And they said, hey, when you're going into this program, all of your client searches are going to switch over. However, because all of the data input fields are different, sorry, not all of them, some of them are different, the searches did not go over as automatic searches. So right now, if you're a client or if you're set up on an automatic search with a realtor, you might not be getting any search results. So each person needs to go back through, each agent needs to go back through and automatically set up searches for all of their clients. Sorry, not automatically. Needs to go back through and click, 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 set up searches. And the fields aren't the same anymore. So, hey, you said you wanted to see a house with SDUs because we used to have a button on MLS to be able to say, hey, show me houses with SDUs. Well, sorry, that's not a button anymore. You can't click houses with SDUs. It's not a searchable field. What you can do is you can search for houses with 2 kitchens. Is it legal? Who knows? So,
wow,
yeah.
That's like one of those typical things where the people that are making the decision have never worked in the position. But I mean, you guys are run by realtors, so I find that really odd.
But and that's not at all the case. The people who are making these decisions are also actively working at it. But there's more to it than this, right? There's more to it than how we as realtors serve our clients. There's this whole other political aspect about like I was telling you before, about amalgamating boards, all this sort of stuff, right? About being compliant with a realtor cooperation policy. So there's a lot going on here. This is the trickle down effect, and it fucking sucks, right? And we're kind of having to deal with it. And this is, you know, and all the realtors say, "Who did this? Why are you making this sucky thing?" Da da da. Because it's about more than us. It's about more than our clients. If everyone in Toronto uses this same technology and they're able to serve their clients, we'll get over it. We'll figure it out. We'll have to flex and change how we operate. You know, and there's things that we can't do anymore, or maybe we can say, hey, look, we want you to add this piece of functionality to it. Can you do that for us? Maybe they can, maybe they can't. Who knows? You know, that's for someone above my attention level who can go and deal with that. I'll just deal with what we have. You know, even setting up a search for a client. You used to go in and you would build the search out on the map. You would build, here's the criteria that I want. Say, okay, here's the search. Good. Send it to this client as an automatic email. It doesn't work like that anymore. Now, again, it's backwards, right? So you got to go and build the client and say, here's the client name, here's the client email, here's this. Then you go and build the search out, and then you say, okay, now send this search to this client. You can't send it to the client until you've built the client in the program. So there's absolutely a lot. But from what I understand, and there's so here's the other piece. There's 2 different programs that agents are all trying to fuck around with and figure out which one do I like more. One is the new Matrix, which is just like a bastardized version of the one that we had, or there's this brand new system called Realm. And Realm is like the new way of the future, right? It has an app for the clients. It's more consumer friendly, but it's much different than what we were using. So the agents are going to have to, if they choose to go new matrix and then Realm, they've got a two-step. Some agents are realizing, look, the new matrix is such a far cry from the matrix that we had before that I might as well just skip that middle step and go all the way to Realm, right? And I think that's what a lot of agents are coming to, and like, okay, well, I'm just going to do Realm and let me just rip off the band-aid, figure this out. It's a slow time right now, slow time of year. Let me get all this stuff figured out. Let me get proficient so that when 2025 hits, I'm ready to rock and roll. So this is what we're dealing with. It's a lot. Whatever, you know.
Yeah, the mortgage game has changed every year that I've been involved with it. Rules, regulations, paperwork, and it's just like to the point where a deal I did the year before, I couldn't do the next year. So it was good that those people bought when they did because they wouldn't be buying this year. Right. So yeah, what are you going to do? You can sit there and complain about it, or you can roll with it. And it seems to be, it's similar in our industry when we had to get relicensed this year, and our licensing levels changed, and then the anti-money laundering rules that they've thrown on top of us again, more, right? And a lot of this is, to a degree, is to weed people out, right? You're trying to weed people, trying to weed the bad brokers out, trying to weed the bad brokerages out, and some of the older people who are like, I still want to change. They're like, yeah, right, and just I'm out. Right, the amount, I wonder how, the amount of realtors in the GTA that just didn't renew their license, and when Tressa came out because they didn't want to deal with it, it'd be interesting to see that number because that stat will be available soon.
You know what? This is the total guess, and I have no idea. I could be wrong, but my guess is they make more money on new licensing for new agents than they make in fees that they charge to agents that are active. That are actively paying. So maybe that's it. We'll take a quick break. We'll come back on the flip side, talk about some other stuff. Kyle's got his awesome penalty story to share with you. I've got an interesting thing that we found out about the N13 form. So talking about tenancy and how to terminate tenancy when you're doing some repairs and renovations. Here, a quick word from our sponsor, and catch you on the flip side. So I worked with Azita from PrimeService Insurance multiple times on my personal home. I also had her connect with some of my clients, and she offers a level of service that I find is hard to find in the world today. The kind of person who, when you say, look, I don't know what I'm doing, this is out of my area of expertise, can you please help me out? And she takes it over and says, okay, this is great. I'm going to do 1, 2, 3, 4, 5. I need you to do this and this. I say, oh, well, wait a sec. What about this or this other thing? And she's like, you know what? Don't worry about it. I've already taken care of that. I've taken that out of your equation. You don't need to worry about that. You don't need to think about it. You just need to do this thing here and this thing here. That was it. And not only that, because she's an insurance broker, she was able to shop for the best insurance price and value so that it worked out exceptionally well. I had, after I started working with her, unfortunately, I had a car accident. The kids got hurt. And, her level of service during that time, most brokers wouldn't really care about it. But what she did is she took care of making sure, hey, here's who you need to touch. Here's who you need to touch base with. Here's who you need to talk to. And you know what happened? I was really well taken care of through that whole process. My insurance policy covered my car rental for 9 months. I was not.
What they do? Rebuild the car?
Buddy, I didn't even want a new car. I had to fight with the insurance company, not her fault, but I had to fight with the insurance company for so long to say, look, I just don't want the car back. Well, sorry, it's outside of our policy. Your car is too new. It's too expensive. The repair is only going to cost this. You know what the repair and the car rental bill was at the end of it? $50,000. And they said that's outside of our range of what we want to pay for, because they've got a ratio, right? If your car was worth this and it cost this much to fix it, so I said, look, if I would have bought a less expensive car, you're telling me that you would have replaced it, right? And they're like, well, it would have depended on a lot of factors, sir. I'm like, yeah, okay. Anyways, through all of that, Azita was an absolute gem, and she's the kind of person who I'm happy to let our clients know, hey, reach out to Azita. She'll just take care of everything and make it so that you don't have to worry about it. and it's all taken care of. I think that is, in today's world, such a huge value add. And not only that, the rates that you pay are better. So it's like a win-win. Anyways, check it out. PrimeService Insurance. Azita Fathi is her name, and she is lovely. So thank you very much, Azita, for helping us out with the podcast and being a sponsor of our show today. Welcome back to the second half of the Real Collective podcast. As always, Sean Tasse, joined by my friend, Kyle Miller. K Mills, K Milson, Millicent. What's your best going name? Best going moniker?
Most people's handle is Millsy.
Mills.
They call me. Yeah. I didn't pick it, but that's what they use. So it is what it is. You don't typically get to pick your own nickname. So,
you know what mine was in high school? Tasse. That's what it is, right? So it's just kind of stuck.
Yeah, exactly.
That's it is what it is. Okay, so hit like button, subscribe, all that kind of shit. Whatever. You don't need to hear about that. What you want to hear about is the story time. So let's get into it. Kyle, tell us the story about your over $150,000 penalty.
So here's the thing that people really need to understand. I've talked about it a lot, and I'm going to keep talking about it more into 2025 for sure, because we're going to see stories like this, right? I did a deal with a gentleman about a year and a half ago, and it was one of the biggest deals I've ever done, because it was a house down in the GTA, West GTA. So we're over $1 million, and it was a tough deal. It was a tough story. He was in a personal situation, verge of losing the home, and it's a family home, and it was big, and it was grand, and it was cool. He was out of a messy divorce, and job was tight and not existent to a degree. And it was a tough situation, right? It's a tough situation. And he got me emotionally invested, which is always harder. And I do get invested with my clients. This one was just a little bit more beaten into me. And we got the deal done on a couple fronts. And we had it done privately because it was an equity deal. We didn't have the income. We had rent. It was weird. It was just different. But we could get it done because the lenders believed in the story and believed in the equity and the safety net based on the value, right, of the property, which is a good deal. But high interest rate, at the time would have been 9-10% probably, and big fee. You're paying a 2 to 3, we'll call it 3% fee on that. So I mean, you're gonna dump 20-30 grand on a fee for a deal like this. And then I got to get paid. And unfortunately, the lenders don't pay me in that case. So I had to tack on a fee. And then it's expensive. And he didn't deal well with that. And it was, because he's going to dump 30-40 grand in fees to get this deal done that he did need. But that was it. So we just eating into that equity. And he couldn't wrap his head around the whole, it shouldn't be this way. And they have to understand that this is a situation, and I'm a good guy, and I don't, and it's that emotional, the world shouldn't be this way, Kyle, right? It's it is. It fucking is this way. End of story, right? Now, move ahead. It gets done completely differently. We hooked it up a completely different way, which turned out to be a great deal in the end. And one of the last times we were chatting and putting the deal together, it was hey, look, the rate's higher because rates are high right now. I don't know that a 5-year fixed is a good idea. I don't think it is, because your life is going to change.
Yeah.
Right? We're doing this to save your situation. You've already got interviews. You've got a new relationship going. So the divorce is done. The kids are safe. All this is good. You're heading that way. Don't lock yourself into this, because things are going to change. Rates are going to come down. We don't know when. Your life is going to improve. It already is. We're good. We don't want to hang on to this. No. I got to get this off my head. It's got to be clear cut. This, that. Look, if you change your mind down the road, this is going to cost a lot of money. Boom. Today, the call comes out and says, hey, I looked into it, and the penalty's over $160,000. And my response was, yeah, that can't be. Impossible. Not allowed. They have to be they have to change this. They have to that's illegal. No. Here's the thing, guys. It's math. It's just math. That's all it is. The reason penalties are calculated on a 3-month interest or IRD, right, is because it alleviates the bank going, Sean, don't like you. That's your penalty. It has nothing to do with you. Right? You are not so important that they are trying to screw you. It's the way the penalties are calculated, right? It's just math. Like, you're not special enough to have someone just say there. Like, you're just not. We want to be so important to the bank. We want to be so important, right? One of the words this gentleman used was, if I do this with them, they have to realize all the extra money that's going to come to them in the next however many years. I'm like, there's 9,000 other people lined up behind you to take this money. Yeah. No offense. Yeah. You aren't that special to them. Yeah. And if we get caught in that, that's how things get detrimental. Is we think the bank cares about us. They do not, guys. They do. I work in this industry. I talk to these people several times a day. It's not about you. I'm like, there's a small portion that's about you. And that's because the story helps the underwriter work the deal a little bit harder. Right. And push for a certain exception. Yeah. But at the end of the day, it's dollars and cents.
Well,
it's just crazy.
I guess the important thing here to state is you got this guy bought because of his good story. And it sounds like he might not have got bought somewhere else. And yeah, the rate was higher, and yeah, there were fees to pay. You were able to tell a story, and his story did benefit him, right? His personal situation, there was some personal thing to it. Great. But on the way out, not the same thing, right? Like you said, the bank doesn't care. You care. You get caught up, right? Because you're Kyle and you're a real human being. The bank, and the reason, that's why there's a gap between the consumer and the bank, and that's the gap that you sit in, right? There's a gap between a buyer and a seller, and that's the gap that I sit in, right? We're the people who care. The buyer doesn't give a shit what the seller wants to get for their house. The buyer wants to get the house for the best price that they can. The seller does not care what the pre-approval level is of the buyer, other than the fact that they need to be able to close. If they want more money for the house, or they don't care about their personal situation, oh, well, I got to send my kids to private school because the seller doesn't care about that. The seller wants to get as much money for the house as they can. Similar, obviously, buyers and sellers are not institutions, but that's what you and I do, right? That's where we live, in that middleman situation where we're stuck between somebody's emotions and somebody else's lack of emotions, right?
Well, it just 2 weeks ago, we let a deal. For the first time in my career, I told a client, I'm like, don't do this deal. Just walk away from this one. I'm sorry. I can't fix this. This is out of my hands. Because he put his offer in, all accepted, no big deal. He's rock solid client, like great credit, great job, tons of money for down payment. Perfect. Well, let's rock and roll. When I pull the credit, he's been defrauded for like 50 grand, right? And identity theft and the whole bit. It'll all get worked out. There's no, it's yes, it sucks. It's a problem, but it will be worked out. The wheels are already in motion. Yes, it's a big deal. I don't want to say no big deal. It will fix, right? Problem is, will it fix before closing? He doesn't know. I don't know. And the banks are just like, well, it takes us 2 weeks to do our investigation. Burp, burp, burp. And then will they provide the right documentation that my lender's going to be okay with? Because what's weird about that situation is they look at the client like he's the fraudster.
Right.
You're the first person to know that you're frauded, and you're the first person to know all your own answers. Right. So they have to get through you as the main suspect to then go, oh, okay, somebody else did this. And that takes time, right? And all to say in the end, all to say in the end, the sellers were bummed because they had their house off the market for 5 or 7 days, right? And again, but if you broke it down to just an anecdotal thing, it's like, hey, bud, that's an issue. That's not an ish me. And
Yeah.
if we had let him proceed, on the hope,
Right.
that this was all going to be rectified, what are the sellers going to do? They're just going to, well, thanks for your deposit. There's 10 grand. And we'll put it back in the market now. We're going to sue you for the difference. Again, ish you, not an ish me. So let's move on. Right. And like, but that's literally the mentality. Right. And unfortunately, that's what's going to happen with this one. It's like, there's no negotiating here because it's not about you.
Right.
It's just math. The rates have dropped that much. You have a 7-digit mortgage. The penalty is going to be exponentially higher. Like, so the whole point of that story is you really have to look at what you're doing, right? And listen to some of that advice. And sometimes you have to take the little bit of a higher today to save on the out, right?
Yeah.
To save that. And it's the short-sightedness that we live in. And that's the disappointing part, right? It's like I tell clients all the time, I'm like, I care. I just don't care. Like, here's your 3-year, here's your 5-year, here's your adjustable, here's all the reasons you should do none of them and all the reasons to do all of them. And let's walk through your situation. We'll narrow it down. At the end of the day, I'm not paying the bill.
That's right.
You are, right? So, but when you make that decision, you're living with it, not me. You're living with it.
Yeah. Yeah.
So, anyway.
No, it's good. I would say the best takeaway was an issue, not an ish me. I like that one. Like that one a lot. We'll skip over talking about the N13 because we're kind of running out of time here. It's a good time to wrap it up. We'll save that for next week or into the future. As always, hit that like button, subscribe to the channel, share this with somebody you think might like this conversation. You can download the buyer or seller guides below if you're listening on Apple Podcasts or Spotify. Thanks for your ears. If you're watching on YouTube, thank you for your eyes. And if you'd like to book an appointment with Kyle or I, you can do so on the calendar links below. And of course, check out the links below. Prime Insurance with Azita. You can check that all down below. PrimeService Insurance, sorry. And you can check out our website and reach out if you have any questions. As always, the phone number 1-888-REAL585. And until next time, keep it real.
Collective.